Morning, everybody. It's the 3rd of August. We are Signal Centre Talking Book. Joe Neighbour, joined by Ian Coleman. How you doing, mate?
Yeah, very well, you?
Yeah, good, thanks.
Of course, you're extremely happy after the weekend.
Yes, it was a fun Saturday,
Yes.
celebrating the FA Cup win.
Was it liquid?
Oh, of course.
Yeah, good.
Yeah,
The
plenty
whole
of
of
that.
your family Gooners?
Yeah, every single one of them.
Right.
Yeah,
It was a family affair. Nice.
indeed it was. I had to get up quite early on Sunday morning for a big run, 18 miles. So I felt a
Oh,
bit.
Jesus.
Yeah, I felt a bit ropey, to say the least. But got it done.
Well done.
Yeah, cheers.
I'm going to say there must have been a few pints of water consumed before you went to bed and when you woke up in the morning.
Absolutely.
Good stuff.
Those are the keen eye will spot. There's no Steve today. He's off on holiday this week. He may be tuning in. Maybe the one viewer we've got at the minute. Hi,
You're
Steve.
very Dalek-y again with your
Oh,
headphone.
fucking
Right.
Steve stitched me up with this, didn't he?
Yeah, he's giving you the moody one.
Anyway, fun and games this morning on the markets. Anything that is standing out for you? Or
the dollar really. I mean, I sort of I was going back to this is the dollar index and sort of just having a butcher's look at this, but I mean technically is it hit support? Well, not really. I mean, this is a 61.8% fib and it got through there, but we have got an engulfing candle on the daily chart, and again, it's not at any particular technical level, but I'm just wondering if this is a short fifth, so 1 and then down in 3 here, up in 4, didn't hit the resistance level, and then completing down here in 5. I mean, it doesn't look great on the dollar index chart, but when you go back to sort of the FX majors, then we sort of start seeing a different picture, because on euro dollar we've hit a 61.8% fib. We flagged this up last week. 1820 was 1815 was a swing high, and 1823 was a 61.8% fib, and we've seen a decent move off the top. And again, daily chart, it's an engulfing, it's not an outside. I prefer it when it takes out completely the previous candle, and it's only taking out the body, so it's not a bearish outside, it's just a bearish engulfing. But what I do like, I'm going to go to these time frames, is a possibility of a reversal formation. So head and shoulders and wedge formations are probably the most reliable reversal patterns that you can get. I think wedges are 70% hit rate, and I think head and shoulders, I think about 65 or something. So not bad going. What I can see here, previous swing high and resistance level, sort of 1803, 1806, but we haven't got any resistance until 1844, which is exactly where the fib is here. So I prefer to get short on a decent rally as opposed to a short correction. With regards to sort of other sort of FX majors, that again, I was away on Friday, but I mean, this is dollar yen. And again, no real sort of technical level, but under 61.8%, we're in this very choppy bearish channel formation. And then on the daily chart, you've got this whopper of a bullish engulfing candle. Normally, when you get one of those, it will signal the base of a trend and the start of a new upward bias. And also, what makes this stronger for me is the fact it's also a TD flip candle, which basically means that it closes higher than the close of the candle 4 candles previously, which is this one here. So it's not only engulfed 3 days of price action, but it's also closed above there, which gives it a TD flip. You will notice that today it's just been sold into above this swing low, so what was support becomes resistance, and levels above there are getting sold into. And I've sort of squinted and tried to get 5 waves on this morning, so you can see how impulsive it was, and it was mainly yen weakness, not dollar strength, for that move. Because we obviously saw euro yen, sterling yen, Aussie yen all move to the upside as well. But I mean, a 5 wave count again, I don't think you want to be jumping on it too early. We've got a swing high here at 104.85. We've got bespoke support at 104.73, and then we've got 78.6% pullback level at 104.66. So what I always look for is sort of confluence zones. So you don't just want one reason to buy it, you want a couple of reasons just to give you a bit more oomph and a bit more power. So I do think that this morning we're probably going to see corrections in most of sort of Friday moves, and just hopefully get on a few of them, but we'll have to wait and see.
Cool, great roundup. Did you see Bitcoin over the weekend? I know obviously you cover that chart
Which
as
one?
well. Did you see the Bitcoin?
Yes, had a right tank, didn't it? Let me
Yeah.
go on to these other charts. Yeah, I mean that's the downward move there,
Pretty
which
savage.
on a 4-hour chart is pretty aggressive. Was that?
So it crossed yesterday, according to what I've got here, crossed above 12,000 for the first time since August 2019, and then it plunged 10%
No,
within minutes.
nice. Was it minutes?
Yeah, minutes they're talking about.
Oh yeah, nasty. That's a 10-minute chart. You don't need to be buying on a break then, do you?
No.
That could be the quickest trade of your life, that one.
Quickest, well, just carry you out, wouldn't it?
Quickest out of your life, yeah.
Yeah.
I mean, it's had a really decent move to the upside. What as it does have a tendency to do these days is it's a bit safe haveny, isn't it? It does have a tendency to sort of follow stocks, and we've seen stocks move to the downside. I mean, I'm sure you're going to show the indice charts at the moment, but there's quite a few wedges in the indices, and yet this has sort of continued to drive higher. So, you know, maybe it was due a correction, but I think in the long run, cryptos still look quite bullish, really.
Yeah, I think so too. But let's have a look at some of the indices. This is what we've got, Eurostoxx 50. This is an hourly chart. So clearly the momentum is bearish. We're starting to see some bigger swings in volatility over the last few hours. Obviously, we had month end on Friday, so there would have been some more exaggeration in the moves. Let's have a look at FTSE. That's well, I'm looking to sell rallies in that today if we get any. We've seen a sell-off early doors. Seems to be some buying support around about 58.50 on that, so keep an eye on that level. I think what's going on with the FTSE, it's being dragged lower by HSBC. HSBC is the largest constituent in the FTSE 100. So if that has a bad day, it tends to have quite a negative effect on the overall index. This is the daily chart. We've seen a gap lower, quite a considerable gap lower, and we're now down by 4.5% or 4.3% on that today.
Banks are being smashed again, aren't they? Lloyd's, I noticed, was down quite aggressively, sort of obviously from March, but
yeah, they're putting money aside for bad loans as they expect there to be a number of defaults on debt as a result of COVID-19.
I think
and
there'll be a few people fiddling the 50k, that's for sure.
Yeah, and it obviously with banks, they make money on when we have a positive or strong interest rates. And at the moment, when we have a zero interest rate sort of outlook across most central banks, there's not really much money for banks to make. So it's a continued struggle there, and doesn't look great at all. If we have a quick look at metals, still very much bullish of gold. It looks as though we're getting a bit of a sort of triangle consolidation, which will have a bias, I think, probably to break in line with the overall trend. But obviously, if it does break to the downside, then we could see some sort of corrective move. I don't think the bull run's over there yet, so I'm looking to buy on dips today down to 90.50 on gold. Similar case for silver, just consolidating, it seems, at the minute. So looking to buy dips a bit lower down on that as well. US indices I haven't really looked at, but as expected, they're all pretty strong. I think we're getting a little bit of a slowdown in some of the earnings. I think all the big numbers or the big names have reported last week, so there's only a few left to report, and they're not going to be sort of big bellwethers for the index. So I have to wait and see what happens this week. But yeah, that pretty much rounds out what I'm seeing on the charts. Not an awful lot. It is obviously well into the summer months now, so things are slowing down a little bit. With regards to what's driving the markets from a news perspective, more lockdown chat. Australia, I saw having a bit of a bad time. I think they've gone to some serious lockdown measures. I mean, they managed to keep the virus out for a long period of time, didn't they?
Yeah.
But that seems to have bitten them now. There's 1 million cases every 4 days now.
Yeah,
I guess you saw the
250,000
Bloomberg.
a day, and we're at 18 million, and at the current rate, we'll hit 50 million by Christmas.
And they're talking about new lockdown measures in London as well, following reports of
And for the over 50s, so you'll be all right, Joe, but me and Steve will be locked back up.
That's a shame.
I'm going to say,
50s.
start selling shares in boozers, in pubs. Yeah, the over 50s, but the 50s to 70s, they're going to do some sort of, I think it's a health check, but not on you. You haven't got to go for a health check. They'll have a look at your medical record, and basically, if you're looking a bit dodgy, and you're between 50 and 70, then you're not going to be allowed out to play anymore.
Oh, okay.
So might be able to get a few spots on the golf course a bit easier, but
yeah, maybe. But they're talking about schools as well come September. Obviously, it's a big thing in that when schools go back in the UK. But I think there's talk of it being a one or the other situation with the pubs and the schools.
Okay.
So you have to shut the pubs if they're going to open the schools or something along those lines. Speaking to my teacher friends yesterday. Yeah, who knows? Certainly nowhere near the end of this because.
It's bizarre because teachers spend most of their weekend in the pubs, don't they?
Exactly. Yeah. Maybe that's the issue. They're going to take it back to the schools and start spreading it around.
Yeah.
And all the kids' parents obviously drinking the pubs because that's the only way you can drown out the voice of annoying kids.
Yeah, that's true.
Bless them. Okay, anything else on the news front? What we got?
Not really. That's all I had on my scribble pad this morning.
So we had Japanese GDP. That remains muted at minus 0.6, yet there was a strong upward revision to the Q1 figure, which helped tell a positive story. We've got the Caixin Manufacturing Index from China that had a 52.8% reading, which represents the highest monthly expansion since early 2011. So that's pretty good. Although obviously there are fears of a second wave of infections, and that's continuing to dent sentiment. On the data front today, we have US ISM Manufacturing Index, which is generally quite a high impact number. We're expected to see the index rise to 53.4 from 52.6, and that's out at 3 p.m. today.
Okay.
So gun to the head, obviously Ian wasn't about on Friday, so it was just trades for myself and Steve. We had, let's add that to the stream. A trade in sterling Oz, which went quite nicely, dipped off a little bit just before the 9 p.m. close for a 1.16R return, and Steve was stopped out on his euro yen trade. That, as Ian touched upon, yen weakness meant that went flying higher.
It was quite. It was very aggressive. Why was that? Do you know? I mean, it wasn't in the overnight session. It was sort of 8 o'clock onwards, or UK time. But
yeah, it was a big old move. It was like 100 ticks.
Just a bit strange when indices are still on their arse a bit, but anyway.
Yeah, so anything new out this morning? Got the live scorecard. We've got some manufacturing PMIs out of Italy and France, both round about where they're expected to be. Okay, so Ian, have you got any trade ideas for us today? What are you looking at to start the week?
I've not looked through all the crosses. So I've only looked at 15 currency pairs this morning. So
is that all?
I'm struggling for a trade. It's a bit bizarre, no, but so I'm looking at what does interest me is the commodity pairs. So this is Aussie dollar. We've seen a sort of push through. We're sort of getting into a bit of a congestion zone up here. This is the weekly chart. If you go to the daily chart, again, it's a bit more aggressive than euro dollar in the fact that we nearly got an outside bar. I'm wondering if these are wedges. I'm sure if I put an indicator on, not that one. Yes, if I just put an RSI on, which is probably the most favored one, you can note that we're starting to get divergence here. So that's normally seen before we get an aggressive move to the downside, or at least a decent correction. So you're getting higher highs on the chart, lower highs on the oscillator. And I wonder if these are sort of starting to be wedge formations. So I'm a bit more bearish on commodity currencies than I am on euro, dollar and sterling dollar at current levels. But I mean, I don't really like anything at current levels, to be perfectly honest. But I'm going to have a look at dollar CAD this morning.
Okay.
So we've got this confluence area. Now, it could be a Gartley. It could not be a Gartley, but what it might be is a continuation of a fourth wave correction. So normally when we get these confluence areas, so this is a 61.8% extension of this move, and this line here is a 78.6% pullback of this move. So you've got, again, when we were saying we like to get these confluence areas because you've got sort of a double whammy of at least a correction to the upside. If you go to the sort of daily chart, you can see that we broke out of this channel formation. So probably as far as Elliott wave is concerned, wave 1, wave 2, again not a very aggressive pullback for 2, and then down to 161.8%. But what it could be also is a double bottom formation. What I do quite like is on the 30th of July we posted this bearish engulfing candle, this outside. On Friday, even though we had dollar strength in other currency pairs, you can see that it was just like a mild inside bar, but what it did do as well was hold within the upper half of the 30th of July's range, and that highlights that the downward correction is mild and probably corrective. We've got a reverse trend line resistance here at move it up, 135.92, which I think is quite important when you go to a shorter time frame. So if you go to this time frame, this is a 4-hour chart. You had this wedge formation, so like I was saying, 65% of wedges play out, and then we stalled. We had some bespoke resistance here at about 50, and then a swing high here. So it made its wedge target, and I'm wondering now whether or not it will come down and form a reverse head and shoulders pattern. So my prime long entry is here, 133.52, but what we have got is if we do break out of this head and shoulders, this is the neckline, this blue line, then what you basically do is you take the high from the low and then you project it from the breakout level, and that comes in at 135.94. So if you go back to that daily chart, resistance is at 135.92, so marrying up very well there. Like I said, the R from here is a bit crap, but I'm gonna have to take it because I really can't see anything else that I fancy. So 134.17, I'm going to get long of dollar CAD. 135.90, not to be greedy, but I need a massive stop from this sort of area, which is 89 ticks. So it only puts me in at 1.94 R for a. Well, we'll wait and see.
Yeah. Okay.
But like I said, I haven't looked at the other 16 crosses or whatever it is.
Yeah, fair enough. Well, there's a thorough explanation nonetheless. So, there's plenty of good reasons there to have a look. Okay, I'm going to look at sterling, Aussie yen. We've just been triggered on that intraday. So this was our prime long entry down at 75.30. Reason being, we've seen a decent correction lower. We've seen a bit of a channel formation and then a breakout. So looking for a retest of that today. We've got 61.8%, which pretty much nailed the move low this morning. We was in just a little bit higher than that actually at 75.30. We're a few ticks on side, so I'm going to continue to back that from where we are at the moment, which is 75.40. I'm going to target the same level that I'm looking at on an intraday basis, which is 75.90. But because we've seen a decent reaction at that 61.8 and a bit of a spike in the candle there, I'm going to make the stop a little bit more aggressive at 75.22. So that will be a 2.78 R return if it continues to move higher from here. On the intraday basis, the stop is a bit lower at 75.08. So if you did fancy that, wanted to have a little bit more of a conservative stop, then you could go a bit lower at 75.08. But just keep an eye on your risk reward if you do go in at current levels.
Lovely. Good luck.
Yeah, that's my idea for today. Let's see how they play out. I think we've pretty much covered it all there. Covered all the news, covered what's out today.
Covered your football.
Charts, covered the football, covered some.
Stevie's off all week, isn't he?
He's off all week, yeah.
Okay,
so
lovely. Yes. Well, not lovely, but
lovely for him.
Lovely for him, yeah.
Yeah. Okay, so we'll be back tomorrow morning then.
Lovely.
Cool.
Have a good
great
one.
day.
Cheers,
see you guys. Bye bye.